Canadian TFSA investors can target energy exposure via CNQ as its 294% run persists, while Vanguard sector ETFs offer simple allocation tools. This is Modern Investing Techniques, episode 132. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Over the past week, the dominant threads have been sector rotation into energy names, continued signals around AI infrastructure spending, and the repeated value of waiting for volume confirmation before committing capital. Those threads carried through multiple episodes and still shape how we read today's price action across indices. The S&P 500 closed at 7,758, up 0.6%. The NASDAQ Composite finished at 26,691, up 1.3%. The TSX Composite closed at 36,381, up 0.7%. Sentiment drew support from 36% of U.S. companies reporting standard pay increases and ongoing AI infrastructure spending signals. The nearest Bank of Canada and Fed decisions remain the key macro frame, with rate-sensitive sectors repricing on each data release. Energy names led Canadian moves, while tech showed mixed follow-through after recent earnings. Remember, the EPD energy pick from 15 days ago closed down 1.45%. Today's CNQ coverage shows how sector momentum can persist despite valuation flags. Broad index gains are masking rotation within sectors, which is exactly why targeted tools become useful right now. Vanguard's 11-sector ETFs let investors build precise exposure without single stock risk by allocating across energy, technology, financials, and other groups. The list includes VDE for oil and gas producers, refiners, and energy equipment. It also includes VCR for retailers, automakers, restaurants, and travel. VPU covers electric, gas, and water utilities. VGT tracks software, hardware, and semiconductors including NVIDIA and Microsoft. VIS follows aerospace, defense, machinery, and transportation. VNQ holds REITs across warehouses, offices, cell towers, and apartments. VDC covers food, beverage, household products, and big box retailers. VOX includes media, entertainment, and telecom. VFH tracks banks, insurers, asset managers, and payment companies. VAW holds chemical producers, miners, and packaging. VHT follows drug makers, medical device makers, and health insurers. Today's market conditions reward this approach because broad index gains mask rotation within sectors, allowing targeted bets on themes like energy infrastructure or consumer staples. Implementation starts with a brokerage screener to compare expense ratios and holdings overlap, then dollar cost averaging into one or two ETFs that match your macro view. The strategy has worked best during periods of sector dispersion, such as post-earnings seasons when one group outperforms the broader market by 5 to 10%. Risks include tracking error during low-volume periods and the need to rebalance quarterly to avoid drift. Pair any new allocation with a same-day volume check on the underlying names before treating the position as confirmed. This is a simulated trade for educational purposes only. No real money is involved. This is not financial advice. Today's pick is none. We are monitoring CNQ.TO in the energy sector on the TSX. The strategy calls for a valuation screen on continued production growth with volume confirmation required. The catalyst is the 294% multi-year run, still labeled cheap by multiple valuation screens despite elevated multiples. The technical setup shows price action above the 200-day moving average on the daily chart, waiting for volume above the 20-day average to confirm follow-through. Risk assessment points to further multiple compression if oil prices stall, with a stop that would trigger on a daily close below the 50-day moving average. The target remains plus 3% to plus 6% on a confirmed volume spike. Confidence level is low because this is a single factor setup without volume or earnings catalyst alignment. The watchlist approach demonstrates how to apply valuation screens without forcing a trade when confirmation data is missing. Listeners learn to wait for the exact trigger rather than entering on narrative alone. No newly closed trades since the last review. The most recent practice investment has already been reviewed. Current holdings remain open and pending their scheduled evaluation, so there is no new realized result to report today. Options Play Market Playbook delivers a weekly macro outlook plus 7 breakout ideas generated from its early breakout detector algorithm. Canadian investors gain an edge by cross-checking the ideas against TSX holdings in their TFSA before market open each Monday. Access starts with the free tier that includes the Growth Lab session on covered call income strategies. The Monday edition supplies the same advanced start every week with macro outlook, market drivers, and fresh ideas from the detector. Thursday sessions focus on beginner-friendly techniques for generating income from existing positions. Revenue at Figma grew 48% year over year to $370.1 million, with net dollar retention at 136% and $100,000 plus ARR customers up 46%. Free cash flow reached $53.2 million, while more than 80% of $10,000 plus ARR customers consumed AI credits weekly. Citi maintained its buy rating and raised the price target from $35 to $37. The stock sold off on concerns over AI infrastructure costs, lower free cash flow margins, and third quarter growth implying approximately 36% year-over-year revenue. Full-year guidance was raised to $1.463 billion to $1.467 billion, and the final extended lockup released 77.7 million shares. Action is to add FIG to the watch list and wait for a retest of the post-earnings low before considering any entry. For months, every piece of good news on Palantir appeared to pressure the stock lower until the latest earnings report produced a visible change in price behavior. Action is to review existing Palantir position size against the 50-day moving average before adding. Fresh momentum appears in the growth story for Propel Holdings, this Canadian lender, with the latest update highlighting continued expansion. Action is to screen PRL.TO against its 20-day volume average before any TFSA addition. Total trades stand at 45. Win rate is 53% with 24 wins, 20 losses, and 1 break-even. Cumulative P&L is $246.82. Matched window alpha versus NASDAQ compounded over each trade's own holding window is plus 2.3% across 40 benchmarked trades. Sum of per trade alpha on a simple additive tally is plus 7.7%. Average return per trade is plus 0.55%. Best trade reached plus 20.11%. Worst trade was minus 11.80%. Current streak is 1 win. Imagine you bought shares of a new sector ETF tracking energy names right after a positive unemployment revision. Your order filled at the mid-price, yet the actual cost reflected a temporary widening that ate into the first 0.4% of expected return. The mechanism works through market maker inventory risk. When rotation flows hit one sector faster than others, the bid-ask spread on the ETF can jump from 2 to 3 cents to 12 to 15 cents within the first 30 minutes of trading as liquidity providers adjust. Professionals always check the 20-day average volume and the underlying holdings aggregate spread before placing the order, then use a limit order set 0.1% inside the current quote. What most retail investors do not realize is that the ETF's creation-redemption process eventually narrows the spread again, but only after the initial flow imbalance clears. The misconception to avoid is assuming every ETF trade executes near the last print. The fix is to compare the ETF's spread against its underlying basket average before hitting the buy button. The creation-redemption arbitrage that keeps ETF prices aligned with net asset value depends on authorized participants delivering or receiving baskets of underlying stocks. When sector rotation accelerates, those participants face higher hedging costs because the individual names inside the ETF may trade on wider spreads or lower volume than the ETF itself. In practice, this shows up as the ETF printing at a discount or premium to NAV for several minutes until enough creation units are processed. A Canadian investor using a TFSA might see the quoted spread on VDE widen from 3 cents to 14 cents on a day when oil futures move sharply, even though the underlying energy stocks have not all moved in lockstep. The same dynamic appears in VGT when semiconductor names experience sudden order flow after an NVIDIA-related headline. Limit orders placed at the mid-price often sit unfilled while the market moves away, forcing the investor either to chase or to accept a worse fill later. Checking the 20-day average daily volume of both the ETF and its top 10 holdings gives a practical signal. If the ETF's volume is running at only 60% of its average while the underlying names are at 120%, the spread is likely to remain elevated until flows balance. Setting alerts on the underlying basket's aggregate spread rather than the ETF quote alone prevents entering positions at artificially wide levels that erode the intended sector exposure. Before we wrap, watch for how the volume confirmation requirement on CNQ.to resolves when we open the new week. That's it for today's Modern Investing Techniques. The resources page has links to everything we discussed. Subscribe and share with someone who wants to go beyond index funds. See you tomorrow, and if you'd rather watch than listen, find us on YouTube at NARA Network, links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen. SpaceX Daily, the daily companion for following SpaceX as a public company. From Starship to the stock ticker. Find every show free at naranetwork.com. The age of AI puts real builders on the phone with an AI host. Apply at naranetwork.com. Age of AI apply. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you did